If you are a parent or a guardian or somebody else who's responsible for paying for somebody's college education, I have a couple of thoughts for you that I'd like you to hear. I'm Jessica Lanning. I'm an independent certified financial planner. I'm based in San Francisco. Here are the things that I always want to bring to my clients' attention. Number one, you should always fill out the free application for federal student aid, otherwise known as FAFSA. And yes, it was a train wreck this year. Crossing fingers, it will get better, but you want to fill out that form, even if you think you make too much money or have too much money, because it is also a way that colleges will evaluate whether or not to give your student merit-based aid or perhaps give you need-based aid even. The second thing is, I want you to think about your 529 plan as an asset in your overall wealth. Rather than as a college funding tool, you should see it as a way to create multi-generational wealth. There are ways to use the 529 plan to help your student when they get out of college to create a Roth IRA, which would allow them to even perhaps use that money to buy a house. And it is also a way to pass that money down to generations. So don't just look at your 529 plan as a way to fund college. And the third thing is, if you are self-employed, there are so many opportunities for you to take advantage of the tax code in order to save money in taxes and therefore have more money available to pay for your students' college education. So you want to make sure you're paying attention to those. So again, fill out the free application for federal student aid, the FAFSA. Make sure your 529 is being looked at as part of your overall wealth. And number three, make sure that you're taking advantage of all the tax strategies available to you if you are self-employed. I'm Jessica Lanning. Lanning does planning.